Hi, this is Sankar Sharma. In this video, we're going to talk about cybersecurity stocks, 5 of them. Let's get started. We're going to take a deep dive into each of these stocks and see what is under the bonnet. And also, we're going to look at possible targets if these guys take off. If you're already a member, thank you so much for your support. If you're not a member already, if you're not subscribed to this channel, do subscribe to this channel so you don't miss out all the good information that we're going to share with you. In this video, we're going to specifically focus on five cybersecurity stocks. Let's get started. Hi, welcome back. The first stock we're going to talk about is CrowdStrike. Let's go and examine the numbers on CrowdStrike and see how it is doing. If I take you to this chart, you can see the performance-wise, the revenue, net income, and net margin. If you look at these figures, you can see for CrowdStrike, the net income has turned positive, revenues has been steadily increasing, and net margin, if you look at last time and this time, it has improved year on year. Now, if you go and look at the quarterly figures, they're still doing much better. It's improving every quarter. So that means CrowdStrike has got good momentum, good progress in terms of its performance revenue figures. Now let's look at the revenue breakdown. If you see, CrowdStrike is getting most of its money from subscriptions. That is excellent news. That means subscription means they can forecast their income clearly and concisely. And they're also doing some professional service, which is interesting. Now, if you look at their market share, their biggest share is United States, and the next one is Europe, and then Asia, then rest of the world. Now, that is amazing. They've got good reach. I want to look at quarterly health, financial health. So if you look at quarterly health, financial health, it's got debt. Debt is about 791 million US dollars. But it also got free cash flow about 272, about 1/3 of it, let's say. Right? Cash equivalents is 4 billion. So it is well-funded company. It's got enough cash. Now let's go on the other side, look at assets and liabilities. We want to see asset number greater than liability number, because asset number means they got money coming in. Liability means money going out. So they got a lot of money coming in, less money going out. So that implies that the company is doing really well. Now, the next piece I want to look at is this. We got to look at the statements. Look at the income statement. Last 2 quarters, pre-tax income has been growing, which is excellent. Net income has been growing, which is good. EBITDA is also looking good. Yeah. Of course, total operating expenses are also a little bit on the higher side, which is normal. Let's look at the balance sheet. Balance sheet, if you look at the net debt has been coming down. Assets versus liabilities, if you see, it's got more assets than liabilities, which is excellent, almost double the amount of liability they got assets, which is good news. Let's look at cash flow, free cash flow. Free cash flow is positive, which is nice. But if you look at P ratio, that is quite a bit. So what it means is generally for a technology company, the price to earnings ratio generally tend to be high anyway. That's not what we're going to focus. We're going to focus on price to book ratio. Generally for tech company, there will be higher number. The price to sales ratio can be better, but it is not bad for tech company. Net margin and gross margins. Gross margins is 75%, net margin is 4.88. So overall, if you look at the different metrics, it is all looking good. I would have preferred price to book value a little bit lower, but that's okay. So overall, CrowdStrike is looking good. So CrowdStrike doesn't pay dividends. Let's go check the earnings. If you see earnings surprises consistently surprising on earnings side, which is excellent. If you look at revenues, they are continuously progressing to the upside, which is excellent. If you go and look at revenue figures, revenue has been steadily going up, and subscription business has been growing like anything, which is nice. And market share has been improving, which is excellent. So overall, if you look at CrowdStrike, so CrowdStrike produces cybersecurity products and services to stop breaches. It offers cloud-delivered protection across endpoints, cloud workloads, etc. So overall, in spite of any negative news it had, it is looking very good at the moment. Now let's jump in and examine the charts, see if charts are telling any different story. So let's jump in and examine the CrowdStrike chart. Now, if you look at the long-term target for CrowdStrike, it is around 585 to 645, because we got a cup and handle pattern on the weekly, right? That is given us a long-term target of 645. And overall, if it once it goes above these two dotted levels, it should go higher. So if we take a deep dive and look at these two levels, we can see CrowdStrike wants to go higher once it crosses these two levels. Like once it crosses 366 mark, it's going to run away to 397 or so. So which is not bad, really. That looks very good to me. And overall, if you look at it, it's in a nice trend. Look at the trend. See, it's going in a steady trend. So you can see it is going in a nice, beautiful channel. As long as continuing the channel, it should do very well. And if it breaks below the bottom of this channel, then there is a trouble. Otherwise, it looks like it's recovered from whatever its past issues and it's steadily growing. So at this rate, it could go a lot higher in the coming years. So that is good news for CrowdStrike. Hi, this is Sankar Sharma. Welcome back to the Cybersecurity Stock Series. The next stock we're going to discuss is Palo Alto Networks, and the symbol for it is PANW. Let's take a deep dive and look at the details. This stock, just like CrowdStrike, they provide network security solutions to enterprises, service providers, and government entities. And they have 15.29K employees, and the market cap is 127 according to this. So let's take a deep dive and see what they are doing. They don't pay dividend, which is good to know. If you look at their annual growth, all cybersecurity stocks seem to have good amount of growth, and this is no exception. If you look at quarterly figures, they've been steady Eddie in this, which is nice. So if you look at their market share, they're getting subscription, support, and global cybersecurity provider. So they got three different components. So if you look at where they serve, they seem to serve again US, Europe, Asia, and other countries. The biggest share is US, followed by Europe, and then Asia. If you look at their quarterly, the Q1, it had a bigger amount of debt and it had bigger pile of free cash flow. Now, if you look at the cash flow, free cash flow is reduced. And if you look at the debt from then to now, the debt is also reduced and they have good cash equivalent. So it's like almost like a one-to-one cash equivalent to debt and then plus some free cash flow. That's how I see it. Now let's go and examine the other numbers. Let's look at the statements. If you see the income statement, pre-tax income is good and is growing. Net income is growing. Total operating expense tend to be a higher side, which is okay. Now let's look at the balance sheet. The assets versus liabilities. Assets is where money is coming in. Liabilities where it's going out. So assets should be bigger than liabilities, which it is. And equity is 4.47 billion, which is good. And net debt is coming down. That is all good. And if you look at recent assets to liability, assets are slightly more than liabilities. So let's look at other things. Let's look at some valuation figures. If you look at price to sales ratio, it's pretty much same as CrowdStrike, but a little bit better. Price to book, again, they're going to be a little bit expensive for tech stocks, so there's no point in looking at price to book here. Net margin is healthy. Gross margin a little bit less than CrowdStrike. It doesn't pay dividends. Let's look at earnings. Earnings surprise has been pretty good. Revenue surprise has been pretty good. Overall, Palo Alto Network looks good on the number side. Let's go and check the chart. So here is Palo Alto Network. You scroll back. If you draw the channel, you can see we are still going in the uptrending channel. And inside this channel, we got another nice trending channel. So overall, we are looking good. Palo Alto Network looks good for the long run. And we can think of this when it's a good time to buy. So where is the good time to buy? Anywhere in this region would be good period to buy. Anywhere there would be good to buy. And a pullback, and that could be good. If you look at the longer term time frame, you see still steadily going higher. Okay, that brings to end of Palo Alto Network analysis. Thank you for the privilege of your time. Don't forget to subscribe to this channel and view other videos on this channel. Now, leave a positive comment. Thank you so much. Shankar Sharma signing off. Bye for now.